Hey guys, welcome to the Profitable Traders. Have you ever wondered how profitable swing traders catch big moves of more than 500 pips in the market? The secret is identifying reversals, then entering the market at the start of a reversal. There are 4 steps that I take to identify these reversals. If you want to learn my 4 steps of a reversal strategy, then watch this video till the end. And before we dive in guys, could you smash that subscribe button and the notifications bell so that you don't miss any of the future uploads? So let's get started. Like I said guys, there are 4 steps in identifying a reversal. The first step is to look for a trending market before anticipating for a reversal. A reversal guys is when a market changes its direction, and for a market to change its direction it must have been trending in a particular direction. In this particular case, this market was trending to the upside, making higher highs and higher lows till it came here. So as you can see guys, the market is trending to the upside direction. So this is the first step you have to take. You have to look for the market which is trending in a particular direction. Then after identifying the trend of the market, then you identify a dynamic key level of structure at a potential reversal point. This is our second step. What's a dynamic key level of structure? This could be resistance or support. If the market is trending in an uptrend direction, then you look for a dynamic key level of resistance. But if the market is trending in a downtrend direction, then you look for a dynamic key level of support. And what's a dynamic key level of structure? Is a level that has been tested multiple times. And in this case here, what do you see here? You see a level that has been tested multiple times. This is a level that has been tested multiple times. It was tested here as support, here as support, here as support, here as resistance here, and as support here. As you can see guys, this is a level of structure that has been tested multiple times as support and resistance in the past. So you identify that level. So step number 3 is identify a possible sign of a new trend. What's a possible sign of a new trend? Let's say the market is trending to the upside. This is making higher highs and higher lows. Then all of a sudden you see this kind of move. Now when the market starts to make lower lows and lower highs with an impulsive leg, pullback, then another impulsive leg, this shows a sign of a new trend. So this one here becomes our possible sign of a new trend. So our step number 3, you look for a sign of a potential new trend. This becomes our potential new trend. And for a market that is trending to the downside, let's say it's making lower lows, lower highs, lower lows, lower highs, then all of a sudden you see this kind of move. So in this case here, our potential new trend is when you see a market making higher highs and higher lows after it has been making lower lows and lower highs. If the market is in a downtrend, if the market is in an uptrend, then you look for a market that's making higher highs and higher lows, then all of a sudden it makes lower lows and lower highs. Let me show you what I mean here. After this market has been trending to the upside, you see this move of a potential new trend. You see a market that has made an impulsive leg, a retracement that does not close above the previous level of structure, and another impulsive leg that closes below this level of structure. After you identify a potential new trend, then you wait for a pullback after the second impulsive leg. And our fourth step is look for a simple price action pattern to enter the market. And this simple price action pattern, guys, can be double tops, double bottoms, can be head and shoulders pattern. It can be candlestick patterns like engulfing candles. It can be like break of a trend line. You can use any price action pattern for you to enter the market. Then after that, you see this kind of a big wave that has happened. And this big wave, guys, it's about, let me see, and this big wave is about 600 pips on a daily time frame. So let's look for another example. Another example is here. I circled it already so that I keep this video short. So what do you see here? You see a trending market, a market making lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. So guys, you see this market here is making lower lows and lower highs, which is in a downtrend. So this is the first step you have to take. Identify the trend of a market. After identifying the direction of a market, then you look for a key level of structure, a dynamic key level of structure. On the dynamic key level of structure, guys, if you scroll here to the left, what do you see? You see this level was tested here as resistance with this false breakout, as support here, and as support. And let's see whether it was tested here in the past. Yeah, it was tested here as support as well. And there's it, guys. So we have identified our key level of structure. Our key level of structure, which is being tested multiple times as support and resistance in the past. So our third step is to identify a possible sign of a new trend. And identifying this possible sign of a new trend, guys, I told you that is when you see a move that looks like this. Let me change the color to black. Now this market, as you see, it's making lower lows and lower highs. Then all of a sudden it makes an impulsive leg, a pullback, another impulsive leg that closes above the previous level of structure. So to me, this is a potential new trend. So when that happens, what I do is wait for a pullback that does not close below this support level. If it pulls back to this resistance level or in between the resistance level and support level, then I look for a simple price action pattern. And this simple price action pattern, guys, can be double top, as I said before, head and shoulders pattern. It can be an engulfing candle, can be a shooting star, or a hammer. You just go and look for any price action pattern that you've been using. Then after that, what do you see? You see a market that moves to the upside, that reverses to the upside. And how many pips are these, guys? about 550 pips. See what I'm saying, guys? This is how you can spot these reversals. Another example, guys, is here. This one is another example. And what do you see? You see a market that is trending to the upside. Then when it reaches this dynamic key level of resistance, this level was tested here as resistance here and respected. This is a level that has made a big push to the downside. This also level has made a big push to the downside, and if we go to the left, still here made a big push to the downside. Resistance here, resistance, and that is it, guys. Then after that, you identify a possible sign of a new trend. And a possible sign of a new trend is when you see a market making lower lows and lower highs when the market was trending in the upside direction. So what do you see here? This market came here, tested this level, got rejected, tested this level for the second time and got rejected, and it failed to make a higher high above this new structure. So this market came here, tested this and was rejected down, pushed down here, that made this sign, then came here. As long as this market does not close above this level of structure, I see a potential reversal. And when this market made a pullback that does not close above this level of structure, what you can do here now is look for a simple price action pattern. You can go to a lower time frame to spot those price action patterns. Then you enter the market and you see a big push to the downside, and you have about 700 pips, guys. Another example here, this one is dollar yen. These are just examples in dollar yen. Another example, guys, let me go faster because this video is getting longer. Another example is here. This market has been trending to the downside, then all of a sudden it came here at this dynamic key level of support. It made a double top, and all of a sudden reverses to the upside. And there are multiple examples. Aussie dollar. In Aussie dollar, guys, we see another example here. This market has been trending to the downside, which is your first step that you have to make. Then when it came to this dynamic level of structure, it was tested here as support. Tested here as support here. We have resistance here, and if you go further to the left, you'd see here is support here, So we see this a level of structure that has been tested multiple times. So once that has happened, then you look for a potential sign of a new trend. And the potential sign of new trend, guys, as I said earlier, is this. You have this market that all of a sudden makes an impulsive leg, then a pullback that does not close the previous level of structure, then makes another impulsive leg that closes above this previous level of resistance, then a pullback at either this resistance level or the support level, but it does not close below the support level here. Then you look for your simple price action pattern, then you enjoy your big wave of a new trend, which is a reversal. And there are multiple examples, guys. You know, we can go, another example is here. This market is trending here to the downside, trending to the downside. As you can see here, then it reached this key level, then it reached this key level of the structure, this dynamic key level of structure. What do you see when this market reached this dynamic key level of structure? A big move to the upside. And we can go on and on and on with examples, guys. Another example is here. We have this dynamic key level of structure that was tested here as resistance, support. So this qualifies to be our dynamic key level of structure. We have this market trending to the upside. It's making higher highs and higher lows, higher highs and higher lows. So when the market reaches this key level of structure, what do you look? You look for a potential sign of a new trend. And the potential sign of a new trend, guys, is here. This made a pullback. This made an impulsive leg, then a pullback that does not close above this level of resistance here, and another impulsive leg and a pullback either here or here, but it does not close above this level here. In this case, it's here. So all you have to do, you go to your smaller time frame and look for a simple price action pattern and enjoy your ride to the downside. This could be 1,000 pips. We have more than 1,000 pips. Guys, if you're enjoying this, can you give this video a thumbs up and subscribe if you haven't yet subscribed, and let me know your thoughts in the comment section below. These are the 4 steps that I use to identify a reversal. Thank you for watching, and see you in the next video.